Hey, it's Wade with Trade ATS. Hey, in this video, I'm gonna walk you through the exact thought process of taking a trade with the ATS methodology, or the Master Pattern methodology that we so lovingly call it. So if you've ever struggled with trying to implement this methodology, watch this whole video. You're gonna get a detailed breakdown of how you identify an opportunity, how you map out the framework, and then how you enter and manage the trades. So this was a great opportunity. We took it during our live webinar, and I've cut it up so you don't have to sit through the whole 2 hours, but it's condensed down as much as I could so that you can get a really good lesson from it. So watch the whole thing. You're gonna get a ton of insight, and hopefully this could be what it takes for you to really pull it over the top and do well with this strategy. So enjoy. But for right now, our directional bias, we're not confirmed yet, but I will tell you that we are very likely to confirm in a long trend, just because obviously we pushed really far, and there has been some candle separation from here to here. So as long as that holds, then we should be getting a new trend line. Now we're deviated far away from it. So right now, if there's any kind of trades going to be taken, it's going to be heavily reliant on the framework in here. So looking at this right here, you may be thinking, well, we're undervalued right here on the minor framework. Do I just go long right here? Now, undervalued on minor framework, this is the hardest one to trade when it comes to a contraction in trend. I'm not saying you can't do it, but you really want to have a little more established expansion legs. You know, this is one expansion leg starting, and this could be a full-blown reversal. I don't think it's highly likely, but I don't know where the bottom of this is right here. Whereas if we had a multi-leg expansion coming out, then I can gauge how far we're going to push based off of the previous expansion legs. So this is like the first one testing the water. And if people get stung the most often, it'll usually be on this first little leg out of a minor contraction. You know, it's starting to work back up through this bearish institutional level. You see the candles are holding the bottom of that. So we'll probably get a spike up through value here, and that's fine. I want it to go through the high of the box because then I'm going to get an expansion line. Once I get an expansion line, now I have some static framework to work with. We can figure some things out from there.
Again, the point is not to catch the turn and catch the absolute best entries. It's to be going in the correct direction. And then you wait for price to swing way back. You'll still get a great entry. And then you're assuming that the trend is going to continue and it's going to push new highs. So that's the expectation. We don't need to worry about anything on this first move.
Yeah, it's the game's all about patience. It's about letting the entries come to you. If it's unclear or looks sketchy, don't do anything. This is out of the last, how many candles from the last contraction? 64 candles, 63 candles. This candle is an anomaly out of the last 60 some candles, right? We've had this kind of normal buying and selling algorithm, real nice, like going up, you know, under trend, going down. This is the kind of stuff that's the easiest to navigate because it's real consistent. And then now we get this giant candle that's breaking out. We got to wait to see kind of what this means. That's interesting that we held that bottom of that box there. You know, that might be a potential place that you'd want to enter, but I'm going to still give it some more time. One thing I want to bring out, you'll notice a lot of times on institutional mode, when you hit an order block projection or a level, we hit this one right here. When you actually hit it, sometimes it'll quickly range up to the opposite side order block projections. So notice that it went from this level right to these levels, like literally within a few candles. Same thing happened on this one right here. We came down right through this order block projection, and that ranged all the way back up to this one on the next leg. So those order block projection levels can almost be looked at as a trigger of volatility. Just something I bring out. You guys will find there's all kinds of little nuances to ATS, and that's why it's a robust chart mapping tool. And you'll pick up on this stuff over time, but it all starts with the basic strategy: identifying trend, trading overvalued, undervalued. That is your bread and butter baseline. You can get fancy later, but this is your home base. All right, so we confirmed. We got an expansion line. We just took out liquidity up here. Ideally, we would love to come down and grab liquidity down here. I like this liquidity, And I like that it's right above this value point because I'd love to take that out and hold above this point. That'd be a nice little sweet spot right here. So this right here technically is where criteria starts. Remember, we were below value. If you wanted to put in one small position that to leg into this trade, that was technically a place to do it. If you want to define kind of the range as I see it right at this moment, where the idea would fall apart, would be basically this zone right there. Maybe give that line a little bit of room right down here. But that's kind of the zone that I'd be looking at. You have a liquidity line in there. We have some nice framework from back here, these two. Like if you're going to go in three positions, one could start right here just because you're like, okay, at least we're undervalued or close to value. And then I'm willing to be creative inside this general box with another two positions. Yeah, you need to understand that the range, that this is really kind of the playground right now. We have swing high liquidity right here we just took out, and we have swing low. That's the entire point of the master pattern, is giving us, this range here to deal with. And we have a central point to work towards. That's why we say wait for framework, because now I have something that I can calculate risk from, and I can see progress when I get up through that. I want the multi-leg expansion because it shows me that the banks have interest at that level. Okay, so now we're through liquidity, we're through the swing low. So we're now, again, they're just going to see what kind of reactions we get down in this neighborhood. So I'm also looking at the 30-minute chart here. Where's the basement of the previous candle? If they really want to mess with people, they could take this candle all the way down into this range right here, right where our ATS trend is. Keep that in mind too. We really, in this situation with this kind of gap action, I really want to be patient with this moment. I do not want to trade back down through this candle. We're going to see what if we hold around this level right here. I generally want to be inside the zone. Stop loss, I would throw just down here. Not that I want to use it down here, but I just want to have it in place in case there is some black swan looking candle that comes down against me. But that's it. We have liquidity. This is that sweet spot I was talking about that I would like it to hold. Again, I can't control what's going to happen here. I don't know. But I do know that we have swing low liquidity we just took out. We're on another multi-leg expansion. I'm undervalued. If it's going to work out, this is a decent spot to start something.
Hey, Wade, can you cover what a base hit would look like in this instance?
This line from here to there. This is all ATS is doing is trying to get you from undervalued to value in trend. I would like to hang out in this range right here. But again, I'm looking ultimately in this range between liquidity. I want to see that this liquidity was ultimately harvested to go long. And I'd like to hang out above this framework. So that's really the question. All right. So traders jump this candle. Obviously, the question is, are they going to come down, mess with them at this low, and then reverse it maybe? Or is this going to head back short? We're finding out right now.
Notice right there over on the 30-minute, it's right at the low of that previous institutional level.
Yeah. All right. I'm done with that. So now we're consolidated. We have a little hit right there. Now the question is, if we're going to come back down, we have other benchmark prices here we'd like to see. And I'm not saying I wouldn't re-enter if it turned, but this is through where I wouldn't want it to go. I'd like to see us get in the next 10 minutes, get a new 30-minute candle and then work on the basement of this current candle. That's what I don't like about this, is that the basement of the last candle is way down here. And if we get a full retracement of that candle, that's what I don't want to risk. Well, that'd be annoying if that was the bottom. All good. You can't force it. You just got to let the stuff come to you. Sometimes you'll do good, sometimes you won't. All right, we'll give this one another shot. So we held the bottom of this institutional level right here. We'll see if this is going to give us a spike back up. So let's do one more right here. Again, this is all based on holding now this general range. And now that we came through here, I have this low to work with. There's some other framework and different things in here that were established. And this is all potentially just establishing this rotation around this liquidity and this value point. The one thing I like to be a little more aggressive on the grade A opportunities, just because if this does pay, Yeah, you will take a few hits. Sometimes you will get caught in reversals, but the ones that do, it's probably going a minimum to this order block projection and probably beyond that. So we'll see. So we got our new 30-minute candle. So now we could be working in the range of this wick right here. So thankfully I have that to work with now. And I like that. We've established price up here quite a bit now. Now there is definitely a situation that can happen where we come down through this low. I'm very well aware of that, but I like the fact that we're just ranging out here, and I do know that there's a high likelihood that I'm going to see this price. And if I just see that price, I got two positions that'll be in the money. All right, so we got some new framework, some minor framework starting to pop up there. I'm telling you guys, all it has to do is get back up through this level, and we're in grade A territory. We're probably coming to the top of the 30-minute candle, and potentially up to liquidity up here, and that's ultimately where I think it's projected to go over the course of the probably the next day. Yeah, sometimes you have to enter without the complete picture, because I know that's the point of with ATS is that we get the boxes. It's a progressive process, and that's the point of starting with one position out of 3 or out of 5. You don't have the whole story. I'm just simply undervalued over at this point, and I'm expecting I'm going to gravitate back to this point. And I had a few different management points from back here. Yeah, it psyched me out a little bit back there, but that's the whole point of one small position. More times than not, you are not going to have the one opportunity that you thought was the perfect entry turns out to be the perfect entry. And if you were just all in at one position, it would all been great. That will happen like 1 out of like 50 times. More times than not, you're going to get in and it's going to mess with you, and you want to have those extra bullets in your in your hopper, right? I came up with this and I caught this because I wasn't good at entry. That's the whole point of the master pattern, because I saw that we have these central value lines, and if I just trade under this equalizing point, that'll make up for when I'm not perfect, which is mostly all the time. That's the saving grace of this whole thing. Yeah, I want to get to this line, and I'd love to get some aggressive move through it up through this liquidity. And then I would start to look at this line as my management point. I'll lock in my profit. I'm not going to move my stop up there because there's a good chance it could range out here, but I'm going to look at closely what kind of reactions I'm getting at that level. That's the whole goal. Just get back to that line.
Yeah, I would say that basically everything that happens in between that last expansion line below us and the one that we're hopefully going up to, everything in between that is noise right now. It's just it doesn't matter.
I
There's
don't,
nothing for it to react to.
yeah, this point right here, that all important line keeps me from going up and down on every one of these candles. Like, should I get out? Should I get, I'm in the money. Like I'm trying to navigate every little thing. That is a gravitational pull to that level. And that's what helps me get through all the noise in the market. And in fact, it's what helps me understand all of this noise is the fact that I have that line. Without that line, that's what you got without that static line. Buying, selling, buying, selling, buying, selling all the time, which seems like, oh, yeah, look at it, just cross over and I can make money from here to there. And then, oh, cross here, I can make money from it. That's what it seems like. This gets you totally screwed up because number one, you get open to buying both sides of the market a lot of times, and it can mess with you big time. The fact that I have this line cuts through all of the noise, and it all comes down to price action and understanding supply and demand and where the balancing points are. There's other finesse, different things we've come up with. We got order block projections, we got expansion legs, we got a lot of fancy things around that, but it all starts from that contraction point. Without that point, it's very hard to survive or make sense of everything else without feeling like there's always going to be some better edge. I'm just one indicator away, or I'm just one, little minor change away from getting it. And that never ends. It just goes on forever and ever and ever. This ends it all. It's not easy, but it's static. It never changes. And it has very clear principles that you can follow. So question, how do I interpret the new box now? Um, I love getting the new box because then I know that there's a gravitational pull here, and now I could see if we did have a multi-leg expansion out around this part, it gives me a new management point to kind of judge that range. So obviously, what I don't want to see on this is that if we did have a multi-leg expansion and then we start holding below this price, that would obviously give me clues that we could be working our way back down to here. So this just basically gives me another line to get clues from. And the clue that I'm getting right now is what we talked about before, getting these gaps up through value. I like this. I like that we got this gap through that value level. That shows me that there's some institutional movement in there because that's how they kick it off. Remember, no one ever gets the first move, but we're already in because of back here. But I like to see that. That's a good clue. But yeah, the more framework you get as things progress just gives you more and more management points to tighten up. That's why you start with a wider stop loss. I remember I always tell you guys that start with that one small position. Wide stop loss might not even totally make sense on the ratio. It's not a 1-to-1. We're not thinking that way. It's for black swan. What we're betting on is that we're opening the position in a generally good range, above or below value, and then we're going to get more information and framework that will allow us to not only put in more positions, but will allow us to tighten things up. And hopefully that first position will be in the money, which is financing the risk of the other positions. But it starts wider, and then with more information, we start to get to tighten it up.
I would
Now,
say
I
you're
wouldn't use these stop losses anymore, although I'm not going to touch them. But now I would be looking at this now. I would be looking at this as a management point, worst case scenario.
before you do any of that, it's like, oh, how'd you know it was going to start pushing up right now? It told us over there on the left-hand side on the 30 minute. It was long. It's been long since we started.
There we go. See that?
Yeah.
There's your value. Now it's starting to kick in again. We knew all this stuff back. Well, it started here, minor framework, and then it goes through a progressive move of development. We get another piece of the story right here. And now we are still interacting with that piece of the story, and we got more story down here. This all started back here, this thought process and how it's unfolding. And it started because we deem this box, and this box, any box that forms in this uptrend with this line supporting it, we predetermine that the future of this is going to be the trend of the three market phases. We have the contraction, we have the expansion, and then the trend is likely to be to the upside. And then we will hopefully establish a box at higher prices. That is the three-phase cycle we're expecting to play out. And the boxes communicate together as well. Even though we got a major framework box down here as well, you could see that it's kicking off, and the fulfillment of this box is either going to be another expansion leg on this box or could lead to the trend phase of this box. They all work together to tell the story. But the only thing that helps us understand the story and stay on track is the bias. Even when we're wrong, even when we catch a reversal, that the trick is to stay true to the bias. That's where most people, they give up, they judge it wrong 1 or 2 times. They're not even judge it wrong. It's just they were wrong. It's no big deal. And then they give up and they abandon the bias and they abandon all the principles. Okay, now we're at the line. Very common to range out here a little bit, but typically what we don't want to see too big of a ranges come back through here. We really want to hold above this line. We want to work through liquidity, and I'd love to see a nice boost up to order block projection right here. That'd be great. That'd be a home run. You're hitting order block projections in trend with your higher time frame. Take them. That's a great trade from undervalued to order block projection high. Well done. So we're at the ceiling of the 30-minute candle. So we're getting a reaction as well through there. So question is, we're going to smash the ceiling, get up through it. But thankfully, because of trading undervalued and using this as a reference, I have some level of choices, as opposed to a lot of people are jumping and buying right here, which isn't super terrible. At least you're at value. And if we get up through this liquidity, you're going to have a lot of people jumping up and buying right here. They might get paid, maybe. But that's the difference between strong trade placement and weak trade placement, is where you are in this line.
Now, as far as stops go, where would you be willing to ride this back to see if it pushes up?
It'd suck if it comes back down to here, which it might. But that's kind of where, that's where Ultimately, I really wouldn't want to see any aggressive move through here ultimately, but I would really like to see this thing hang out up through this line and take off. You very well could take your both your trades off right here at value, take your profit, walk away. It's a decent day. This right here is where it becomes finesse. This is where it becomes experience. This is where it's a little more difficult. I got to roll the dice a little bit right now. I know that we're typically going to have a little ranged out reaction here. That's very common. It's a little bit of a dice roll to see if we get a push through because this is my money in the bank from down here. Yeah, I had this one little hit right here, but I was able to get into positions and get back up to this level, which is the one that's mostly guaranteed. And the good news is when you really nail your entry down here, you can roll the dice and you got more room when you get up to interact with this line. It all depends. Sometimes your entry won't be that good. You'll get it like not that great, and then you'll just be barely getting back in the money by the time you get up here. Then maybe you don't really want to roll the dice. It depends on where you've been for the session. If you've already crushed like 2 or 3 entries and you're way up, trade them all. Keep going. Don't break rules, but you've earned the right. You can build on that. But if you've just been struggling and you're just trying to get by, sometimes it's best just take those base hits. You'll know when you have hit it out of the park, you've nailed some entries, you got a couple of good positions built in, you got plenty of room. You're like, I could really let this hang right now because I did good on the entry. It worked out well. I nailed the turning points pretty well. And I'm up. I'm up by the time I hit value, like significantly. Of course, I'm gonna let it roll. Again, these are all things as a trader. These are the things that you guys have to judge according to the session. There is no set rule set on how you make these decisions. Is this making sense to you guys? If I get a little, some of those floating thumbs up things will help me make sure I'm not losing you guys here. So imagine this on your 5 minute and your 30-minute chart. You know, these down from these two positions, this is probably like a 35, 40 pip move just to back to value. So it's obviously on a 1 minute, it's not as significant, but the principles are the same. A little under 4 minutes out from a new 30-minute candle. So it'd be interesting to see if that candle's opening at the high of these 3 candles over here. That's a good sign. Yeah. So now the question is, are we going to work up to the order block projection right here? 16.3 pips. And if we get up to there, I mean, you could still ride it past that if you want, especially if it spikes through it. But that is our total home run now, is getting up to around that level. Yeah, the only thing I'm looking for on the 30-minute is whether I'm above or below ATS trend. And then outside of that, I'm navigating the candles, the basements and the attics of the previous candle. And I'm looking at where could it generally push. You know, we got through liquidity here, but you're not getting that because it was a full-blown reversal up to there. But same thing right here. If you were working this trend on the 30-minute, you'd be working it down, navigating these candles on your 1 minute or, or whatever time frame pairing. And then when we jump through liquidity down here, looking to close, that was it. You're riding that trend down through value through the other side of the cycle. That's why we tell the weather over here, what direction is this going and where could it push to? Answer those 2 questions. Then over here, once you answer those 2 questions over here, then you do what we did right here. Value line, undervalued, talking through the progression every step of the way. This just helps us generally, what direction is it likely to go? But this is our microscope. This is right here. This is our microscope of what is happening inside these candles. There's some principles that we're following, but at the end of the day, it is my belief after so many years that this is the best way to approach the market because it never changes. There's no settings. The market, it is an enhancement to price action. It's something that you could build a foundation on. So I'd like to see this stay above the center of this institutional level. Yeah, and it'll probably still go to the order block projection, but this is by far, we're in major successful territory for this opportunity. So at this point, I'm again just trying to judge it the best I can. I might be wrong about that. The institutional level might not be the perfect level, but it is a significant level. That's why it's there. That's the closest one that I have. We're talking about framework. What framework do you manage your trade by? The one that's most relevant. That's very relevant right this moment. I wonder if all the traders are going, regular technical traders are going to get their counter trend break right there. They're all looking at that.
Is that it? That's about to be it.
A new framework.
We're down through that institutional level now.
Yeah. All right, guys. That's it. It'll probably go now because this frame will probably get some expansion legs through here, but I don't want to come back down to here or revisit here. Not
Yeah.
bad. Was this helpful, guys? I get some more of those floaty thumbs ups. They make me feel warm and fuzzy. That's how you do it. It's remember, guys, it's the principles that we're talking through. Forget about the time frames. This is applied to whatever you're trading, the time frames you're trading, all that stuff. But stick with it, specialize with the markets, especially get heavy on the grade A opportunities that we were referencing back here. You know, those are the ones that if they do work out, and I very well could have held longer through this. Remember that, guys. But we're trying to set a really good example, and this was it, man. We were below value, got 2 positions in, took a little hit, but more than made that up, and we closed up above value. All good. If you do this, even if you take base hits at value, total success.